Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, we discuss all about the stock markets, how the trade has started, and what kind of expectations can you have from the stock markets trade today, and what are the factors that are impacting the sectors and the stocks in today's trading session. Let's start off with the opening today. So the markets have opened lower, up flat with a negative bias on mixed cues that we were getting from overnight US markets, and Asian markets were also trading mixed in the early session as well. And that's what exactly is being reflected in the Indian markets. We've opened in the red, and opening further gap down in the early trading session. Talk about the Sensex level today, and you will be able to see that the stock markets have been declining right from the word go in today's trading session, although it has been just a marginal decline that we've been seeing, about 173 points of a cut on the Sensex. That's 0.3% of a loss, and the Sensex has been trading around 57,119, while the NSE has moved 31 points lower at 17,087. So far, we are protecting the 17,000 level. We'll just have to see how the day pans out and whether this sacrosanct, crucial psychological level of 17,000 remains supported towards the end of the session as well. The mid and the small cap shares are trading on the mixed note as well, with the mid cap edging almost a flattish to negative bias, and also the small cap shares rising about 1/10% higher in the early trading session as well. And why are the markets seeing some kind of an investor sentiment being hit is because of the crude oil prices rising again. You have seen extending gains by over 2% to about $120 a barrel. That's the kind of movement that you've seen on the crude overnight, and closing more than 7% higher over the previous session as well. And that's something that is being seen as a cause of worry across the global markets, with the rising crude oil prices once again, which was so far being seen as the worst being over for the crude oil prices and the movement on the upside. Now, what has this caused is a domestic market stir as well. After many months, we have seen domestic fuel prices rise, that is, petrol and diesel prices rise by over 80 paisa per liter in the capital cities, and in by various pumps as well, by IOC, BPCL, and HPCL. And that is one reason why you're seeing all these oil marketing companies really see some kind of a bounce in today's early trading action. Also, LPG prices have been hiked according to PTI news report. About 50 rupees per cylinder has been increased, and this is actually kind of trickling in into the investor sentiment of the rising energy and fuel prices, really pouring into higher inflation now as well. Now, when we talk about inflation, we do see that several brokerage houses are now again revising their inflation estimates as well on the upside, and there is an estimate of almost 7% inflation in India by some of the brokerage houses as well. Fitch Ratings, on the other hand, has also cut the GDP growth forecast for India for FY23 by 180 basis points to 8.5% on the back of the soaring global energy prices as well. So that's another factor that you need to keep in mind. All in all, you do see most of these oil marketing companies, ONGC, really rising in trade. Metals and IT seeing some support, but rest of the other sectors are seeing some kind of declines coming in today's trading session as well. Let's also look at some of the other macro and market perspective. Now, Ukraine, Russia are to hold more peace talks. So far, we've not seen any clarity really coming through. That is something that we will have an eye out on. No prospect of Indian economy falling into stagflation vortex, and that is what RBI governor's comments have said. That may actually give some support to the sentiments at this point in time, that the policymakers are still positive on the growth factor and the economy reviving from the effects of COVID-19 pandemic. Domestic air passenger traffic has actually increased in February on a month-on-month basis. About 7.7 million domestic passengers traveled by air in February, approximately 20% more than January as well. So that is going to be perhaps seen positive for the entire aviation and travel industry as well. Now, when we talk about the other concern that the markets are having at this point in time, globally, there is a rise in cases of COVID being reported in China and in some parts of Asia. So that is going to be definitely definitely an important development that the markets will continue to track going forward from here. Jerome Powell, the Federal Reserve chairperson, has said that the Fed will be raising rates more aggressively if at all it is needed as well. So that may be another factor that may be weighing on the sentiments right as of now. But overall speaking, the stock markets will be trying to strike a balance between the domestic news flows and these macro developments, and charge through the volatile movements that we've been seeing for many days now. But experts do see some more days of volatility to continue. We'll keep you posted with everything that's developing on these streets, so do stay tuned with us onto Business Today.